Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the opening action, the trading setup, as well as the market strategies for the day to follow. Well, as of yesterday, let's start off with the recap. We did see an initial 1 hour of surge in the markets that took the Nifty to 24,700 odd as well. But then the Nifty reversed its course, shed about 200 points from its peak as well, and also settled at the day's low point as well. So failed to hold on to its opening gains. However, the day's decline was largely driven by Nifty financials, private banks, realty that also ended with some losses. What's happening today? How is the trading setup? Well, overnight we did see the US stocks again clock in fresh record closing highs again. After the latest consumer price index report that stoked the bets that the Federal Reserve is virtually certain to resume the cutting of the interest rates next month. So that was something that kept the indices buoyant. So S&P 500 rose by 1%, Dow Jones ended about 1% higher as well. Asia markets this morning, again, following the Wall Street gains, gained in trade, boosted by US inflation data. Nikkei continued to clock in record moves, 1.3% higher. Hong Kong's Hang Seng was up by 1%. South Korea's Kospi was up by 10% higher as well. We're also actually given to understand that the GIFT Nifty futures are also indicating a positive start in trade today. So let's see how today's day really pans out in trade. Remember, we have also had a CPI-based retail inflation that slipped to an 8-year low. So positive macro data news points that's coming in. And we have the news from several companies and stocks with regards to their earnings as well. So that's something that keep the markets busy today. Let's welcome our guest on board. We have Mr. Gaurang Shah, Senior Vice President of Geojit Investments, now joining in on the program to share with us his insights on markets. Mr. Shah, a warm welcome. Good morning to you. Let's start off first with the overall understanding of the markets. 6 weeks of consolidation, losses on the markets is what we've already seen. This is also largely led by both global and domestic cues. Globally, the uncertainty on tariffs, locally, the domestic earnings as well. I will come to both of these aspects, but purely on the markets front, what is the current thought right now, and where do you see the markets going? I mean, US is on a record high move. Asia, many markets are at a record high move, but we are still struggling. How are you looking at it?
Well, so Sakshi, don't be disappointed. I think sooner or later we'll also be one of the all-time highs market. I'm quite confident about it. It may take some time. Markets is all about patience and investment into strong, fundamentally sound companies. So before I go, there's just a small disclosure. Any recommendation that I'll be giving out on this show this morning, Sakshi, is a part of our research team recommendation. Our company Geojit or we do not have any investment in the recommendations that will be given back, nor do we have any financial interest, no conflict of interest either. But we give advice to our clients on similar lines. They might have their investment position. Now, to answer your question, I think what needs to settle down in the market, Sakshi, is the volatility. This 200 points, 150, 100, 150, 200 points up and down movement on the Nifty, and equally so on the Sensex, creates a lot of uneasiness and uncertainty. And this uncertainty is primarily because of the uncertainty on the global front, like you rightly mentioned, the tariff-related news flows. And they don't seem to be dying down. It started from April 2nd, and it is still continuing. I don't know when it is going to end, though 25th delegation from US coming, big question mark. And then that great date that President Trump has announced of 27th August, when additional 25% tariff will be put into place. Then he said there will be secondary tariffs, etc., etc. I think honestly, market is starting to discount what this guy is saying. The only thing that I am a little bit concerned about is the earnings that you mentioned. We are virtually at the fag end of the earnings. I think this week it will be curtains down for the first quarter earnings. First half was disappointing of the first quarter earnings. Second half was a little bit better. Nothing really great to speak about, but a little bit better. So I think and of course, not to forget, we had an all-time high flows from the data that was given out by MFI in the equity market mutual fund. So that's a positive sign that I'll take. I'll take a positive from last evening's multi-month low inflation number. And I think we should be better off as we go into the future as far as inflation is concerned. I think we are in a trading range, Sakshi. I think the broad range, if you ask me, worst case scenario, okay, I'm talking about the worst case scenario. Worst case scenario from the global front, not from the local front. 24,000, 24,200 on the lower side. On the higher side, 24,600 to 24,800. Well, that's broadly 600 to 800 point range on the Nifty that you will see moves happening unless and until we have clarity from the global arena. And I think once we have that, we'll put everything to rest and we'll start looking forward in terms of triggers, in terms of data, and in terms of earnings. So my sense is that these are the times when you need to reduce your trading related appetite and concentrate more on investment related themes, more so dependent on domestic related data points. I'm not saying that you should be averse towards IT, etc., etc. I think it's a great opportunity. You know, as a brokerage house, we've been positive on IT for a very long time. We continue to remain. But I think if you are a little bit risk averse, then look at domestic driven themes, power generation, defense, capital goods, FMCG, banking, cement. There are a lot of things that you can look at.
Fantastic. That's a great point to start off our conversation with. You've given us a comprehensive overview of what are the key factors the markets are penciling in at this point in time. We will dig deeper to each of those points. So let's start off with the global factor, the tariffs front. You did say that, the markets are acting very mature at this point in time, virtually discounting any kind of erratic announcements that are coming in on an everyday basis as well. But, at this point in time, India has been imposed with a 50% tariff. That virtually puts us next to Brazil. But when we compare it to all the other nations, we are much higher than the developed nations like a UK or a Japan maybe, and also much higher than our neighboring nations as well. So how do you really see this 50% of tariffs? We are still hopeful that some sort of negotiations can actually bring it down. But I think the base case scenario that most of the analysts are now penciling in is that 25% to hoga hi, even if we are able to convince Trump to be our way. And exporters back home were already saying that 25% is also high, but 50% we actually see virtually no trade, a trading halt. So how do you see these points, sir?
I think, a couple of things that this intelligent person called Mr. Donald Trump needs to stop is stop pressurizing, stop arm twisting, and stop making this irrelevant, senseless tweets and statements. Bro, if you wanted to do what you wanted to do, you should have done it on 2nd of April. Why stretch it to this long? Right? So my question is that. And now he's gone and given another 90-day window to China. I mean, yes. China imports more Russian energy requirement than India does. So, I mean, I really fail to understand the rationale behind what President Trump is levying these tariffs, as if India is the only one who's contributing to the Russia-Ukraine war. I mean, it's really silly. So, and even European Union is buying it. Even America is buying it, though not energy, but they are buying chemicals and uranium, etc., related stuff for their EVs. So, I think it's really sad, Sakshi. But having said that, look, be it 25, be it 50, or be it anything else, I think the overall scenario in terms of our total GDP to the exports that we do to US, we may see a little bit of pain in the near term, medium term. Sakshi, not ruling down that. Absolutely agree with that particular fact. But I think then we'll start looking at other geographies, and and the government will make it more viable policies also for affected sectors. I don't know what, how, which form, what will be the time frame, because we don't have clarity on the tariff even now. And I seriously, Sakshi, I'm wondering whether we'll have clarity on 27th of August also. So that's I mean, it's my, what do you call it, a hitch that I am possibly going with, because the way he's been flip-flopping, on his statements, it's a big question mark. So we will have a negative impact. How much, only time will tell. But I think by that time, maybe some amount of support from the government and some amount of diversification of geographies from the corporates, which are directly affected by this 25, 50% or whatever be the tariff, could possibly work out over a longer period of time. But short to medium term, there could be definitely some pain on the numbers that we are looking at.
Short to medium term, there could be some pain, but beyond that, the India growth story continues to be strong. Domestic themes is what you're talking about, sir, is something where you actually believe things could turn out to be much better than the others at this point in time. Meanwhile, the pre-open trick, remember we started off in the green, we are now at flat, 24,491. We'll keep an eye out on that once the pre-open trade settles at around 908. But Mr. Shah, you did say domestic themes. So which are those themes that you would actually believe that investors can continue to invest in this time of uncertainty and a lot of volatility that's taking place?
So, Sakshi, my sense is that, okay, I'll again, possibly run down my memory lane. So, you have banking and finance, you have FMCG, you have cement, you have defense, you have cap goods engineering, you have power, you have telecom service provider companies, you have real estate. So, I think these are sort of 6, 7, 8 sectors that, are there. And most of these, you have hospitality, you have pharma, you have healthcare. I mean, tell me one thing, Sakshi. She's talking about 200% tariff on pharma. Already there is a panic in US where Walmart's prices of banana and potatoes have gone up. If he does what he wants to do, then imagine the price of healthcare that a common citizens in the United States of America who will have to pay. And I think there are enough demonstrations that are happening against Trump for what he's doing. So, it's not like everything is negative for the country which is exporting to the US. There is a lot more negative for the citizens of the United States of America under the policy which Mr. Donald Trump is wanting to work with. So let's give it some time. I think there is a lot of noise that he wants to create. He wants to be the center of attraction. He thinks that he's the God's answer to this face of earth. He's living in an absolute Alice in Wonderland kind of a scenario. And I hope that people who are advising to undo what he's been doing, I hope that wisdom prevails upon him and he does something which is rational, not totally irrational. So there are a lot of sectors, Sakshi, I've pointed out about 7, 8 sectors, which are relatively less exposed to the global news flows. Yeah, I mean, you will have pain in IT, you will have pain in auto, you will have pain in gems and jewelry, you will have pain in textile. He also mentioned about the EMS, electronic manufacturing, chips, semiconductor, PCBs. He'll be putting tariff, and that's one of the reasons why that entire sector saw a downtake. But now it's a recovery kind of a time. So I think let's see what happens. But look, there are opportunities in the domestic driven themes which you can definitely look at.
Right. We have penciled down a lot of those sectors that you've marked out that will be virtually less affected and therefore offer a lot of opportunities to investors to pick and choose from these domestic oriented sectors as well. Let's come to the earnings factor. You did say the first half was negative, second half slightly better in terms of the earnings that have been reported. Can I ask you to be specific where the concerns have actually presented themselves more than the others? Are there any sectors or stocks where you actually believe that the earnings definitely point to some more pain that will continue going forward in this current fiscal year?
So I think one of the loud spoken one sector that underperformed and of course headwinds, there was IT. I mean, there was a huge disappointment. Not only from the large cap IT, Sakshi, this time even mid and small cap also disappointed, which has not been the case in some of the quarters gone by. So IT was a little bit of disappointment. Private sector banks, Sakshi, there was a disappointment. Barring 1 or 2 names, I think there was disappointment over there. Some of the, maybe infrastructure related stocks, there was a little bit of slag over there. So by and large, I think that these are some limited sectors that I could possibly identify immediately right now, which has been some kind of disappointment in the earnings. But I think one thing I always mentioned, Sakshi, that if you invested in any sector, provided that it is a strong fundamental company, there can be problems in one-off quarters in any sector and in any company, whether it is a small, mid, large, or an MNC. But does that one quarter disappointment in earnings result in your logical conclusion to exit the stock? I don't think that's going to be a wise decision. You should give it some time.
Give it some time. Okay. Any sectors where you're actually looking at some green shoots emerging at the first quarter itself that could continue to move higher in the next 3 quarters as well?
So I think cement, Sakshi, it's not been much spoken about. Cement looks very encouraging. Consumption even during monsoon. And there is some, illogical sense that people go that in monsoon, बारिश में निर्माण कार्य नहीं होता है. There is no infrastructure. I think it's a history. I mean, there is a lot of technology development that has happened. Earlier, it used to take 3 weeks for a slab to dry. Now it takes about 4 or 5 days. So the speed of construction has gone up. There are more innovative products which are available now instead of plain cement, which is replaced by blocks of concrete blocks or concrete bricks, etc., etc. So cement is one that looks quite interesting. I think FMCG will pick up. SMCG, when I speak about, Sakshi, is both discretionary and non-discretionary. I think third quarter, October, November, December, you should see significant amount of positive traction, green shoots, as you were mentioning, so that and that will increase the chances of earnings to improve. You have lower crude oil prices, you have lower input cost. Good monsoon will boost the semi-urban rural demand, which will contribute to the volumes, which has not been the case for some quarters. So this, and banking, of course, should improve given the positivity of the run rate on the gross net NPA front and lower interest rates as we go into the future. These are, and I mean, I think cap goods, engineering, defense, they have done extremely well or likely to do extremely well.
Okay, fair point. And the market seemed to be settled in the pre-open trade. We are given to understand there is a positive uptick, in the pre-open trade, which actually indicates to a positive start for the Indian equity markets, both on the Sensex and the Nifty. We could be seeing a higher start for the Nifty at 24,586, about 98 points higher, 0.4% up. Remember, this is what exactly the GIFT Nifty was also getting giving us an indication of. So let's see how this progresses going forward from here. Let's talk about a few stocks and sectors again with Gaurang. I'll start off with the earnings now and, see as to what exactly is your thought process in the earnings that have come in yesterday. And let's try and understand from there. You talked about defense, and defense has been, your core subject that you've talked about for the last 2 years, vocally on our channel, pretty much on all the stocks that you've talked about. We have Cochin Shipyard that came out with the earnings yesterday. HAL, Premier Explosives also came out with the earnings as well. We also had CL coming out with the earnings as well. So I just wanted to understand from you what have been your key takeaways. Let me just also highlight for our viewers some of the key numbers there. For Cochin, we've seen a 38.5% growth in Q1 revenues. And we've also seen the net profit increase by about 8%. HAL, what we've seen is that the consolidated net profit is coming at 1377 odd crore rupees. That's slightly down 4% on a year ago period when we compare. The revenue front has increased by almost 11% at 4,819 odd crores. Let's look at a little deeper. So we've seen for Premier Explosives, the revenues up 71% at 142 odd crore rupees, net profit up 100%, EBITDA up 35% as well, and margins also, coming in at 14.7%. Let's look at Bharat Dynamics. That's another one where revenues improved by 29-30 odd percent, and the net profit also came in higher at 18.3 odd crores. Any key, highlights that you'd like to highlight for us from the earnings fine print that you would want to read for the defense makers?
Well, so Sakshi, look, first of all, there are certain sectors which I'll very humbly request viewers of BTTV to have a view which is longish in terms of evaluating the earnings. Now, why you should not evaluate quarter-on-quarter earnings of defense or cap goods engineering sector is because, this order book takes time to get executed. So, doing a quarter-on-quarter review, according to me, maybe I'm wrong in that, is not a very rational approach. So you do a 6-monthly or more importantly, a yearly kind of an evaluation in terms of the earnings and how things have spanned out. I think that will be a better way to approach. Point number one. Point number two, don't have 3 months, 6 months, 9 months, 1 year, 1.5 year kind of time horizon for both these sectors, capital goods as well as defense sector. And the reason being the same. Execution takes time because these are all complex, high precision, highly engineered products. Execution takes time, approvals takes time, etc., etc., etc. So we like names like L&T, Siemens, ABB in the cap goods engineering space. In the defense space, Cochin Shipyard, BEL, BHEL, these are some of the names. Uh, of course, this is not a recommendation, Sakshi, but just you spoke about earnings. Then I think Bharat Dynamics did extremely well on the earnings front. BEL, Cochin Shipyard, like you were mentioning. And I think with the order book that these companies have, both in defense and cap goods engineering, earnings are definitely going to improve. So my humble request is once again, don't do 3 month. I mean, don't do a quarterly or a 6 monthly comparison. Do a yearly and don't get too carried away by short-term negativities on earnings for these two sectors.
Okay, fair point. Let me come to another pocket, and that's the new age tech basket. Nykaa here has reported its numbers, virtually looking good. 23% of an uptick is what we have seen on the revenue from operations front, coming in at 2,155 odd crores. Profit after tax grew by 79% year on year to 24 odd crore rupees as well. Those are the primary numbers. Any indication that the new age tech basket, even beyond Eternal and Swiggy, is seeing an improvement on the fundamentals? We've virtually looked at how Zomato had outperformed and that pulled up Swiggy with its own self. Now we're also looking at a delivery, for instance. We're also looking at a Nykaa, for instance. How are you looking at the numbers that are coming in? It's indicative of a 5% higher start after the earnings as well, Nykaa.
Well, so it is good to see this improvement. I hope it stays on track. That's the only prayer to Lord Almighty. Because there has been times when there has been a lot of choppiness, volatility, and rightly so because of the nature of business they are into, e-commerce and competitiveness from organized, unorganized sector in the relative sector. So they are doing well. As a disclosure, again, we have a positive coverage on FNS e-commerce, that is Nykaa from a long-term point of view. And my sense is that there should be and I think there was a re-rating this morning. I just had a flying glance on one of the reports, if I'm not mistaken. Correct me if I'm wrong. So we are maintaining a positive stance on Nykaa, but I hope that earnings stay and get better.
Okay, fair point. What about other stocks like, say, for instance, Paytm for that matter as well? Is that also on the focus, because RBI has issued the payment aggregator license to Paytm Payment Services now? So clearly, to operate as the payment aggregator, it's lifts the ban as well. Things auguring well for Paytm?
Improvement, yeah, definitely. I think the great disaster that it had, the IPO, the euphoria, the valuation, the listing, and then the disappointment in terms of lower levels, close to 350, 400, I think we saw as a low on 197, that is Paytm, if I'm not mistaken. So yeah, I mean, it's a turnaround over here as well, but my sense is that again over here, I mean, it has been a company which has supported the country's population during the difficult times in terms of providing a platform for payments, etc. The number of transactions that have got recorded over the last couple of quarters has only improved, Sakshi. So yeah, again, as a disclosure, there's a coverage on 197, that is Paytm as well from a long-term point of view.
Fair point. I'll just highlight for all our viewers some of the brokerage reports, on Paytm as well as Nykaa. So Citi has a report on Paytm today, buy rating and a target price of 12.15. That's again positive for the company. Let's also look at Nykaa. So Morgan Stanley, Nuvama, as well as Nomura, all three of them have maintained a buy rating, with Morgan Stanley maintaining an overweight rating on the company as well, and a target price ranging between 223 to 235 rupees for all these companies that have updated their target prices for Nykaa post earnings. So we'll just keep an eye out on that as well. Apart from this, let me also just bring up for you, Mr. Gaurav, and that's Suzlon is something that I wanted to ask. Again, the earnings continue to be strong across the board for Q1, but there's also this top management rejig. We've seen how the CFO has resigned. Mr. Himanshu Modi has resigned, and what we are given to understand is that the company is looking at replacing him with another CFO in a very short while, is what the statement has read. How are you looking at Suzlon? This was being seen as a widely re-rating kind of a stock over the last 1.5 years, or we did see it surge sharply to over 85 odd levels, 90 odd levels. How are you looking at it right now after the consolidation has played out?
Well, so after the consolidation and the news to look, one thing we should remember, Sakshi, that people come and go, companies stay. Yes, for short to medium term, there would be a reaction depending upon at what level and what kind of contribution that individual has given to the company's growth, and accordingly the reaction will come and go. But these are changes which you cannot stop, Sakshi. Uh, these are ongoing processes and they'll always remain this way. So I think, I mean, again, we have a accumulate stance on Suzlon from a long-term point of view, and I think things have improved for Suzlon over the last maybe about 1 or 2 years in terms of stability, more importantly, coming in, and of course, numbers improving.
Sure. Okay, let's look at the markets then. Markets have opened on the positive note. Nifty Bank both higher in trade, 0.4% uptick for the Nifty Bank. Even the small caps and the mid caps have opened higher. The market breadth is positive, 1247 advances to 335 declines at the moment. Banking gainers and the Nifty Bank is definitely contributing to the gains. IDFC First Bank, AU Small Finance Bank, HDFC, all on the higher zone right now. You're also looking at Apollo Hospitals post earnings 4% higher. This is the next one that we can focus on our conversation with Gaurang. Power Grid is also higher in trade right in the morning. ONGC is up by about 1% as well. So those are some of the top movers in the first trade that we are looking at in trade. So I think on the Nifty also, the breadth is pretty positive, barring Titan, Axis Bank and Tech Mahindra. Rest all of the stocks are actually positive. Apollo Hospitals tops the charts, Hindalco, Power Grid, ONGC, BEL, Adani Enterprises, Tata Motors as among those top 4-5 movers as far as the Nifty move is concerned right now. But clearly, some strong moves that are being seen across the board. Even beyond the top ones, you can now see even Canara Bank moving higher, Adani Enterprises, Honasa is higher, Nykaa is 4.5% up. We were talking about it. JM Financial Services is up for 2.5%. Antony Waste Handling is up by about 7%. And again, Dream Folks is also improving 5% higher. This was, remember, one of the stocks was taking a beating because of increased competition and newer players entering. Although on the negative side, you have Aarti Pharma that's actually declined in trade today, 9%. Rupa and Company also down by about 8% in trade. That's some of the big laggards right in the opening trade right now. Let me, in fact, welcome on board our next guest who's joining in to track technicals. We have Kiran Jani, Head of Technical Research at Janam Broking. Kiran, how do you see the opening in the markets today? What will take your attention?
Very good morning, everyone. So overall, if you look at the market after yesterday's fall, today we are seeing some gap up opening and it is sustaining also. Of course, it is a very good opening considering the daily price because 24,500 is the important support psychologically. Now we have seen day before yesterday there was a very good move. Prices closes above that level. In fact, 100 is moving average. Yesterday the follow buying remained, but it won't sustain. And second half or later part, we have seen some profit booking also, and it is closed below 24,500. In fact, the 100 is moving average. Now today's opening is again above that particular level and 100 is moving average also. Now as we are approaching with the weekly expiry, 24,500 remains very good psychological support. We have seen there is a tug of war between the call writers and put writers. Now the put writers shifting their open interest from 24,000, 24,200 towards 24,500, which is a very confident move, and because of that we are expecting some good amount of rally should come, or it can be considered as a relief rally. If you look at the Nifty and Bank Nifty hourly chart, there is a clear cut double bottom pattern. Nifty is already given a breakout where Bank Nifty is supposed to give a breakout. Bank Nifty's chart now a little bit worried comparing to the Nifty chart. Till yesterday Bank Nifty was outperforming the Nifty, but since yesterday Bank Nifty is underperforming. So as of now, we have to keep a very tight watch on the Bank Nifty. If Bank Nifty is breaking down, it's before recent peak, recent bottom somewhere around 54,800, 900 level. Then we can expect certain price booking or a profit booking moves on Bank Nifty. So as of now, whoever holding Bank Nifty long position, they can hold. Anyone wants to go long, they can go long at current market price, add more above 55,500, keep a strict stop loss of 54,800. If 54,800 is broken down, then this profit booking can go further down. And for the Nifty, 24,400 to 24,500 is the very good support. You can go long at any dips, keep a strict stop loss below 24,300. And looking at overall chart pattern, at least by next weekly expiry, we can expect 24,800 to 24,900 for sure. So both indices buy on dip would be the strategy, but keep a very strict stop loss.
Fair point. Remember the viewers, we were discussing about the defense stocks. All of them have opened higher. BDL, that Gaurangji was talking about, good results. So 4% higher for this one. You also have HAL that's up by nearly 3% in trade. We also have Cochin Shipyard that's also rallied about 2.5-3% right in the morning trade as well. We're also looking at Premier Explosives. In fact, it's exploded right in the morning. 11.5% higher kind of a move is what we have seen on the results that are coming in. So all the defense stocks are rallying in trade, and that couldn't have been, possible without Gaurangji's presence on the channel as well. So whenever he comes in, there is a short boom in the defense stocks like we were discussing. Gaurang, let's discuss even further. Beyond defense as well, a lot of other pockets that are also buzzing. You were talking about even pharma, healthcare, hospital stocks also, if I'm not mistaken. Apollo Hospitals has taken it higher now after the earnings coming in, 5% higher. You did mention that this is one of the safe spaces to look at because of the overhang of uncertainty of Trump tariffs. So these are the domestic pockets that one can look at. Which is your top favorite bet within the healthcare pack?
Now you are going to put a gun on my temple again. Because we have a lot of choice in terms of investment ideas. But if you have a limited capital to invest, then I think I'll name one from pharma, that is pharma manufacturing, healthcare service provider. I'll name one, and possibly a diagnostic company. Before I do that, just let me check Sakshi on the recommendation side, because I don't want to.
Sure.
Give me a second. Yeah. Okay, fine. So we have a coverage on Cipla as far as the manufacturing side is concerned. You mentioned Apollo Hospital. This has been on our positive coverage for a pretty long period of time, and it continues to do that. I think the company is doing everything well in terms of the business strategy. The news flow or the market gossip in terms of the pharmacy business getting hived off and lifted as a separate company is something that will possibly work out, but I think we should wait for the announcement from company. And on the diagnostic sides, we have a coverage on a company called Dr. Lal Path Labs. I think these three would be a perfect mix in pharma universe.
Fair point. We have to let you go soon. So, Gaurangji, I'll take the liberty of asking you one or two couple of more questions before we go on to Kiran. And Kiran, you maybe in the meanwhile, you can find out some stock ideas as well for our viewers to look at. One is NSDL that I wanted to ask you, which we could not ask you before the IPO opened as well. It's galloped and galloped how, listed at 850 and continued to catapult higher beyond 1400 odd levels. Now, the earnings have also come in. The consolidated revenue is down by 7% odd. The profit, although, has increased by 15%. I think there is some degrowth in the main core business, depository business, at this point in time. That is a key concern right now. But what exactly is your thought process on NSDL vis-a-vis the other capital market stories?
Well, Sakshi, I'll put it this way. If you are a believer of Indian stock markets doing well over the next 3 years, 5 years, or maybe more, then the reflection of the performance of Indian stock market will also be positive on stocks which are fundamentally strong and which are associated with the Indian stock market. Now, this is an example. I mean, I'm not giving any recommendation. Be it a platform provider like a BSC, be it a service provider like CDSL or NSDL, or be it a company like CAMS, which, as a disclosure, we have a coverage from our research department, or be it intermediaries. But I was reading one report this morning. There are 6 lakhs accounts cumulatively which the intermediaries have lost. So when an individual closes a broking account, I think he will take that step to close his DP account or DP account in case he or she does not have any meaningful holding in his or her DP account. This is my assumption, of course. Yeah, I may be wrong over here, but again, for the IPO of NSDL, since we could not communicate to each other for 2 weeks, our research team had come out with a subscribe recommendation from a long-term point of view. So if you got NSDL or if you invested in NSDL by the virtue of that IPO note, you can definitely hold on.
go long on it. Okay, the next one and the last one that we will discuss with you is the EMS space that also you marked out, that's also another space that one can clearly watch out for. We have seen how this has emerged as a key favorite and a long-term, a newer sector to really look at for the core portfolios, names like Dixon, Keynes, Amber. You've also marked out PG Electroplast, but by the way, in the last couple of sessions, there has been a lot of pain also that PG Electroplast has seen because the company has reduced their guidance on growth for both revenues and profits substantially. How are you looking at it? Is there any revision on your front as far as PG Electroplast is concerned, or do you believe this is a one-off and things may be on track soon?
So PG Electroplast was hit by a double whammy. Of course, the guidance and the numbers and the outlook was a little bit subdued or below expectation. And the second was that intelligent person in United States of America said that he's going to put duty on chips, semiconductors, PCBs, etc., EMS related products coming into America. So you saw the entire sector taking hit. But you are absolutely right. Since the time we discussed PG Electroplast, it has taken I think it was at 750 levels when we discussed. Then it slipped down to 500. Now it is trading close to about 510. We have not changed our stance. Our research team has not changed the stance as of now. We still maintain an accumulate stance. And I think this correction, Sakshi, is an opportunity to average in case you got invested at higher level or make a fresh investment. Risk reward looks favorable.
Fair point. All right, Mr. Shah, thank you so much for all those insights of yours. It's always a pleasure to host you with us. Hope you have a great time. We'll see you soon on another edition.
Thank you, Sakshi. Thank you. Thank you so much. All the best to you.
Thank you so much. All right, viewers, time to now get back to our technical conversation with Kiran now. 24,550, Kiran, you did say that, the bounce is sustaining at this point in time. Let's see how it really goes. Any key stocks that have come onto your radar?
Yes, basically we would like to go with the large cap only. So two large cap stock which we are liking. One is the SBI. If you look at the overall PSU bank chart, already they are into the very good shape. SBI or maybe Indian Bank, both can be looked at current market price, but Indian Bank has run away. So we would like to give a rate on SBI at current market price. The price is at 820. You can see this is the fourth time prices testing 820. If price keeps sustaining, yesterday we have seen that even though Bank Nifty was trading negatively and underperforming to the overall market, SBI holded its 820 level, and today was also, however, it is trading at days low, but we have a very good confidence on SBI. So one can go long on SBI at current market price, keep a very good stop loss of 800. It's a positional kind of call. If 800 is not broken down, then you can definitely expect 850, 860 kind of a target by at least August end or maybe in mid of September. So SBI looks very much promising at current market price, and it will support Bank Nifty to pull up from lower level. Another one more stock which we are liking, that is again from large cap stock, that is Reliance Industry. If you check last 3 days, Reliance is supporting to the market. However, Reliance has also failed to sustain above its 100 days moving average, but it has created a very good support around 1380, 1370. So chart price looks very much promising at current market price. It is trading at days low only, so it's a very good opportunity. One can go long Reliance at current market price, keep a strict stop loss below 1370. 1370 is not broken down, then you can expect on Reliance 1420, 1430 kind of a target in upcoming time. So Reliance and SBI both are large cap, and I believe, or our research team is definitely believing that this both company will outperform to the market or helping market to pull up from lower level.
Okay, fair point. So those are the key stocks that Kiran believes one can definitely keep an eye out on. Let me also highlight a few more stocks that are buzzing in trade right now. Look at a Paytm for that instance. We talked about it briefly, now up nearly 6% after that regulatory boost coming in for the company. On Paytm, do you think the stock is poised to move even higher from here? Would you take a bet, Kiran? 6% higher at 1185.
So first of all, coming to the Paytm, as a disclaimer point of view, are already holding in our portfolio since very low prices. And if I'm not mistaken, somewhere around starting of this 2025, initially we discussed Paytm somewhere around 700, 600, that it has given a weekly breakout, and we believe that stock price can outperform. Now everyone has become bullish on this Paytm. We believe that story has just started. There is a very good breakout on 1000 rupees now, we can say. So at current market price, we are not supposed to chase this stock. But yeah, any dips towards 1000 would be the great opportunity. Who is holding this particular stock, they should definitely hold this stock. keep 1,000 rupees as a strict stop loss. We have seen past that these stocks face so many regulatory challenge, and that's the reason it crashed down so many times also. So keep a stop loss of 1,000 rupees, and any dips towards 1100 to 1,000 you can go long on Paytm. Looking at overall chart setup of weekly and monthly, stock price can definitely touch to 1,500 in very soon. So stock price is far better. You can definitely go long on Paytm on any dips with the 1,000 rupees stop loss or 1,500 target.
Okay, fair point. I hope this has answered your question well, viewers, as far as this new age tech stock is concerned. We're also looking at many others that are rallying. Apollo, we marked out for all our viewers, rallying about 5% higher. You also have within earnings, Lloyd's Metals up by about 5% post earnings after the Q1 profit rose by about 13 odd percent. That's another stock that's moving up. Nika again up by about 3.5% odd or so, and we have actually seen even Honasa Consumer. That's another one that's actually come in strong. So let's discuss that as well. So the new age tech stocks are definitely in focus today. Paytm, Nika, and now Honasa Consumer, 11.5% higher. Q1 numbers have come in higher than the estimates. Underlying volume growth is coming at 10.5% as well. So that's something that one can also focus on. Are things improving for the better even for Honasa Consumer, Kiran? That's the maker of Mama Earth.
Yeah, if you look at the Honasa Consumer, the overall the chart pattern looks very much promising. If you look at the daily price chart, stock price is as of now trading near its all-time all the moving averages. And today it opened with the open low gap, and now it is trading at open high, and LTP is at days high only. 303 is the price. Overall chart pattern, you can see the rounding bottom pattern or a cup and handle pattern breakout, and with the falling wedge also is there. The stop loss is little bit wider, but one can go long on Honasa Consumer at current market price or any dips towards 290, 280. Keep a strict stop loss of below 250. If 250 is not touched, then we can expect at least 340 to 360 kind of a target where we can see the gap on the daily chart also. So stock price look very much promising. Reversal can play out. Buy on dip would be the strategy with the strict stop loss of 250.
Fair point. Okay, one more, numbers that have put the stock in a forward foot is NMDC, the iron ore miner. We have seen the company post a revenue from operations of 6,634 odd crores, up 23% from last year. Profit after tax, although has slipped by about 1% in trade. So that's NMDC for you. And the stock has been in focus right from the morning trade as well, catapulting higher. Let's try and find out from Kiran what his thought process is on such stocks, metals, mining stocks. How are you looking at these baskets? Is commodity also coming in on your top chart?
See, first of all, I would like to discuss about the ferrous, non-ferrous metals. If you look at the bullions or a ferrous metal, it is performing very well. But if you look at the Nifty metal price chart, the stock price is trading near the breakout level. It has made a double bottom pattern, and after that, we can see the Nifty metal is consolidating between the 9,000 to 9,300. Now it has given a very good breakout. Definitely, one can keep an eye on Nifty metal. No doubt, because of the tariff and everything, being high beta candidate, it is performing with the market. But if you look at whatever the tariff and everything is coming, it is not hampering the metal sector. Though on that part, we are very much bullish on metal. And within the metal, let's discuss first NMDC, and then we'll portray our stocks also where we are bullishing. So NMDC, if you look at the daily price chart, the stock price again sustaining above its previous breakout level, which is 71.72. After facing a resistance, whenever the stock price is going down, it is making higher bottom only. So it is inherently ascending triangle pattern breakout we can consider. With that, stock price is trading also above its all important moving average. Again, it's an inherently bullish signs. So at current market price, one can go long on NMDC, keep a strict stop loss below 69. If 69 is untouched or unbroken, then we can expect price target of 78, 80 kind of in within time. So NMDC, one can keep a long at with the stop loss of 69. Apart from that, Hindalco, we are expecting to move fast in soon. So if you look at the Hindalco price chart, stock price is trading above its all important moving averages. Yesterday, I believe there was a result. I don't know about the result update, but overall chart pattern is very good. it is approaching with falling trend line, and we expect breakout should come. And after the breakout, you can expect price target of somewhere around 770, 780 for sure. So Hindalco looks very much promising at current market price. Go along with the stop loss of 660 and target for the 750.
Okay, fair point. So Hindalco could also be definitely looked at this point in time, as technical charts are poised on the positive side as well. Let me just also highlight for all our viewers, those looking for the earnings. We've seen the net profit jump by 30% to 4,004 crore rupees on lower cost and higher realizations as well. And we have seen strong domestic demand and cost savings also aiding the sentiments and the earning fundamentals of the company this time around. So one can definitely keep an eye out on both fundamentally and technically things auguring well for this pocket as well. Let me just highlight, some of the other key points that one can look at. We were discussing a lot on defense with Gaurang. Kiran, your top choice of stocks, do you think after a bit of consolidation, will things again start to improve on the positive path for defense stocks? Do you think it's the right time to keep accumulating and buying these stocks? And top choice of stocks from your end?
So in defense, I have recently we have seen, I cannot say recently, but the previous 2 years we have seen two themes to be play out. One is the defense and another is the PSU, and third is the shipping. So if we combine all these three themes, we have a two stock which we are liking at even current market price. One is the GRSC, Garden Rich Shipping, and another is the Cochin Shipyard. So they fall in all these three segments: PSUs, they are shipbuilders, and they are building ships or vessels for the defense also. So all these themes, it's suitable for these two stocks. If you look at the chart pattern of GRSC made a high of 3,500, and after that it is consolidating somewhere around 25, 2,600, which is a previous all-time high. With that, stock price is also sustaining above its 100 days moving average. So GRSC look very much promising at current market price. So keep a strict stop loss below 2,400, and you can go long on GRSC for the target of 32, 3,600 in upcoming time. So it's a one kind of a positional call. Definitely you can go long on GRSC. One more stock, Cochin Shipyard, similar chart pattern. It is retesting its previous breakout level. Previously breakout at 1,600, stock price made a high of 2,500. Again, price is consolidating somewhere around 1,600, have a very strong support of 200 days moving average. So one can go long on Cochin Shipyard at current market price. Keep a strict stop loss below 1,500, and you can expect price target of 22, 2,300 in upcoming time. So GRSC and Cochin Shipyard both are very good at current market price. One can go long for sure.
Okay, one can go long for sure. Finally, we have discussed defense stock both on the fundamentals, technicals, and the choice of stocks that are up for you also, viewers. So keep an eye out on that. Okay, Kiran, let's try and understand from beyond these. Are there any spaces that you're finding not to be touched technically? Which are the weaker pockets in the market? Just give that idea to all our viewers as well. Even if they're looking to accumulate in this consolidative market for their portfolios, which is the pocket that's not to be touched?
Not to be touched, then I believe there are but honestly speaking, we are at current market price. All the stocks are looks very much lucrative. So rather saying not to touch, we should believe one should go long. So say for example, if you discuss about contrabet, because there is a tariff news is going on, so everyone is cautious about IT and pharma. So let's take it that way. IT and pharma, you just not touch IT and pharma. But the right time to buy when there is a crisis. When everything is rosy, you should not supposed to buy because the price is already discounted then. So it is better to take the contrabet. But anyways, let's not discuss on that contrabet. So you can avoid IT and pharma because there is uncertainty. But there are so many other stocks which are there and which are not supposed to be correcting or price correct because of the tariff news. So let me discuss about one stock, PVR. Last time also we discussed somewhere around 900 rupees. Stock price is 1100. Even at current market price, we are very much bullish on PVR. No doubt OTT and every headwinds are there, but overall PVR charts looks very much promising. One ascending triangle pattern breakout is there. Stock price is trading about its all important moving averages. Now the festival season are coming, big budget movies are also coming. You can see Naseema is doing fantastic.
Yes.
This kind of movies are coming in recent time, and it will help PVR to do some very good on fundamental side also. Technically, we believe that stock has created bottom. One can go long at current market price, keep a strict stop loss of 950, and whenever you go for the movie, buy one PVR for sure. And we can expect PVR to touch 15, 1600 in very soon.
Okay, got that. I hope this has also answered all of our viewers well. Let me just quickly look at some of the other key stocks as well. From the pharma healthcare pack, are you looking at names like Apollo Hospitals? The stock has moved up 6% post the earnings, now trading at 7,684. Anything else also that comes onto your radar on the pharma healthcare pack, Kiran?
Yeah, so very good choice, I can say. So, say for example, the hospital stocks which not supposed to be touched or which not supposed to be impacted by this tariff news. So, within the pharma, we can select. I can again appreciate your choice. So, within the pharma, you can go for the laboratory stocks. You can go for the hospital stock, which are not supposed to be correcting because of the tariff news. So, hospital stock like Fortis, hospital stock like Narayan Jalaya, stocks like Apollo Hospital, you can definitely go long. Fortis already run away rally, so we don't want to touch Fortis. But look at the Apollo Hospital. Stock price has already given a breakout from previously somewhere around 7,200. It retested after the result. We can see there is a runaway rally. So as of now, at current market price, we are not recommending, but any dips towards 7,500, you can go long on Apollo Hospital with the strict stop loss below 7400. You can also keep an eyes on this Fortis, but at current market price, we are not supposed to go long. But look at the Narayan Hrudayalaya. The stock price corrected from 2,400 to 1,800 level. Now stock price trying to find support somewhere around 100 is moving average. So this contraband looks very much promising at current market price. You can go along with the strict stop loss of 1,700. So Narayan Hrudayalaya and Apollo Hospital both can be on radar for the long.
Fair point. I hope this has also given you a lot of understanding as to how to go about it too. Let me just talk about banks now that we haven't touched for a fairly long time now on the show. Let's now focus a little bit on the banking and the financial names as well. Kiran, if I have to ask you from the banking aspect, which is the segment that's giving you positive signals? Which one would it be? Would it be private banks? Would it be PSU banks or financials right now?
So PSU Bank for sure, as we already discussed about the SBI, if you look at the
Yeah.
Nifty PSU chart looks very much promising at current market price. If you look at overall chart pattern, it is giving a breakout or it is forming inverted head and shoulder for sure. So at current market price, Nifty PSU looks promising. If 6,800 is not broken down, then definitely we can expect a very good rally from Nifty PSU. So Nifty PSU, Indian Bank, which is performed very well. So you can keep an eyes on Indian Bank. If any dips toward 650, 660 would be the great buy. Keep a stick stop loss below 650, 640, and you can expect the target somewhere around 750, 800 in recent time for Indian Bank. SBI we already discussed. Another, you can look around the Bank of India. The Bank of India chart is also very good at current market price. There is a breakout of falling channel. Stock price is finding support around 200 is going average. So with the strict stop loss of 105, you can go long on Indian Bank also. If 105 is not touched or not broken, then you can expect price target of 130 also. So Indian Bank, Bank of India, and SBI looks promising at current market price.
Okay, fair point. So that's the banking story. But I also have to take a view from you, Kiran, on ICICI Bank, particularly after they have increased the minimum balance requirements to 50,000 rupees. What's your broad thought on how is the bank really poised higher? There is a lot of talk about, how this could lead to a lot of closures or, fresh entrants probably looking at switching their choices from ICICI Bank to an HDFC or some other banks. Or do you think this is a kind of an industry leading move that the others will follow? What exactly is the thought process there?
See, honestly speaking, we don't believe or we don't think, I can say, this is our personal opinion. We definitely can go wrong. I don't think so, or we don't think so that this is an industrial move. Everyone will follow because we can still we can have a very prominent data that still 60% or at least we can say 50% of India is living in tier 2 city, and in tier 2 city having a balance of 10,000 or maybe 15,000, it is a challenge for all the account holder. So this definitely we believe ICICI Bank will roll this back for sure, and this decision should not be followed by other banks also. So definitely we face that this is not a very good decision by the ICICI Bank.
Okay, got that. So that's the overall view on the banking aspect as well. But let's try and understand towards the end of the session then that morning trading session that we're doing. Kiran, your strategy, because we have a truncated week, we just have one more day to follow. What's to be done on the index level? And in case you have any more stocks, first half an hour of the candle is formed, any more stocks that you could highlight?
So index view is buy on dips would be the strategy. You can go long on Nifty at current market price, keep a strict stop loss below yesterday low for the intraday point of view. And for the next week, you can keep a stop loss below 24,300 and we can expect a target of somewhere around 25,000 to 24,900 for sure. Coming to the stock specific, as we discussed about the PVR, you can look around. You can also look around Hindalco. And the last stock which we are liking, that is a HPCL or BPCL. Out of both the stock, HPCL looks very much promising. No doubt it is trading near days low, but you can go long on HPCL with the strict stop loss of 390.
Okay, got that. I hope this has also helped all our viewers out form their strategies there. Kiran, it's always good to speak to you and seek all your insights on the markets and the key strategies that you give out for all our viewers. Good to be speaking to you. Thank you so much. We'll see you soon on another edition. So 24,581 viewers on the Nifty. We're about 0.38% higher. Let's hope that this continues to stay on. Remember, yesterday also we started off on a firm footing, and thereafter in the second half we lost all that momentum. Again, we have started on a positive note today. Let's see whether that continues. Remember, a lot of pockets that are contributing to the gains today. Defense stocks are moving higher. New age tech basket is definitely moving up. Pharma healthcare is higher in trade as well. You have the metals, oil and gas, some of those commodity space stocks that are also buzzing in trade. So we'll keep an eye out on all of that. And pharma is also up by about 0.5%. Let's look at healthcare. That's up 1.5%. Defense is up over 1%. Many of these pockets are supporting the indices. Let's see how it goes. We'll continue to cover for you markets throughout the conversations and trading session, and we will of course answer all your stock related queries at 12 noon on daily calls. So in case you are in doubts about the stocks in your portfolio, ask them away and seek a professional advice on the channel on daily calls at 12 noon. I'll see you soon.
Good morning, ladies and gentlemen. A very warm welcome to you on this Tuesday morning for Dalal Street. The market seems to be taking heart from the fact that a lot of selling pressure has now been absorbed, and more importantly, there is little or no bad news left to react